Now, I don't like talking about bonds because bonds are usually very boring, but there is nothing boring about this bond market. Treasuries are trading almost like small cap stocks. That's how I want you to think of them. Think of them like stocks. The owners either can't take the pain,
the house of pain,
or they've got to put up more money to meet the margin calls because of the losses, and they can't. As long as you understand that bonds can plummet just like stocks, that there are short sellers and vulnerable people who buy on margin just like stocks, then maybe you can get your head around the velocity of this move, which is just stunning. I got to tell you, this bond market meltdown is like nothing I can recall in a first world country. Which brings me to the impact on stocks. Right now, as rates go higher, investors are deciding that stocks can't be worth nearly as much as they thought they were. Case in point, something you know in your pantry. Yes, McCormick, the spice company. Today it reported what I thought was an okay quarter, with management talking about great strengths in many categories and raising its forecast. If not for China, McCormick, the spice company, results would have been incredibly robust, and they think China will eventually turn. In a different environment, you know what? I think McCormick stock would have soared today. Yeah. But thanks to this relentless tsunami of selling, it ended up plummeting nearly 8.5%. That's the bond market spilling over to what I'm looking at right here. We like McCormick for its consistent mid-single-digit growth and for its popular brands. The company's been a great acquirer of hot sauces and mustard, all sorts of things that you can use to cook at home. Something we learned during the pandemic is pretty good and cheaper. But with rates going nuts, money managers won't give something like McCormick any credit for consistent single-digit growth, not when the stock sells for 25 times earnings. Remember, when rates go higher, Wall Street collectively pays less for future earnings, as demonstrated and as viewed upon by that multiple of 25. It should be smaller, and that means the stock needs to go lower. So instead of rewarding McCormick for its consistent middling growth, we slaughter it because it's not growing fast enough to justify its valuation in this environment. Whatever used to award McCormick for its bland positive qualities has been washed away thanks to the action in the bonds.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.